Welcome to Zoom Out Bitcoin, the channel where we take a step back, zoom out, and look at the bigger picture involving Bitcoin. Today's a little bit of a different video. As you all can see, hopefully, from the view behind me and tell from the microphone, I've changed places and I've got a couple of new equipment, so hopefully the video quality is going to start increasing from here on out. The past 2 weeks, I haven't made any videos. This is mainly why, and it's something that I would like to start putting out 1 to 2 videos a week moving forward. I've been working on a video called Who Should Buy Bitcoin? It's one that I'm pretty happy with. I've got a lot of data going into it, and I think it's going to turn out really good, but it's also taken a little bit more time to make and do the research than I thought. So originally, I was going to post that video today, but I don't have it where I want to as far as recording it. So instead, I want to kind of do this video, update you all a little bit, tell you all about how I've moved to Chicago and how there's a lot going on, but also I wanted to talk a little bit about things that are happening in the day-to-day and the week-to-week. I know this is Zoom Out Bitcoin, and so we're going to be zooming in a little bit more right now, but I still think this is pretty zoomed out whenever we talk about it. And so what is it that happened? So specifically today, both the S&P 500 and the NASDAQ hit all-time highs. And that is, in my opinion, huge from a macro viewpoint. And that's because previous all-time highs were in January. And in January, we hadn't had DeepSeek yet. We hadn't had tariffs yet. We hadn't had wars and conflicts. And so the perspective is that we're at a higher price today. After DeepSeek comes out and potentially shocks the AI world in terms of what the actual cost for building these AIs and the cost to actually put these AIs out onto the market is, we have all-time highs after Liberation Day, which is one of the single craziest economic policies I've ever seen implemented, followed by trade deals that did or didn't happen, followed by weeks and months of going back and forth and tweets about buying the market, and then new tariffs get announced. We had a trade war with China where tariffs got as high as 125%. The Ukraine-Russia war, which most people and investors thought or hoped would be settled and calmed down by now, after the Zelensky debacle, after things happened where Trump and Zelensky kind of got together and seemed like they were on better terms, and now Russia doesn't want to move forward with it. In addition to that, Israel and Iran obviously getting into a major conflict, a war. America actually bombing Iran, potentially dragging us into another war. All of that has happened since January. And what the market's telling you right now is the valuations of those companies and businesses in January, before we knew all of that, is less than today after everything happened. And that's pretty huge, because back in January, there was a lot of investment hype going on. There was reasons to believe that Trump was just going to cut business taxes. Of course he wouldn't touch tariffs, right? Why would he do that? That would only end badly. But there was belief that it was just going to go straight up, that AI could do anything, that earnings were going to be through the roof, and we haven't seen any of that. And instead, we saw a lot of rocky roads. I remember the talking point last year and at the beginning of this year for the Mag 7 was specifically priced for perfection. And I remember watching an interview where someone talked about that exact topic, that these things are priced for perfection. And in December of 2024, they said the conditions on the road are not going to be conducive of the perfection needed for these companies to actually perform. Instead, we've had significantly worse conditions than anyone could have imagined. And these companies are worth more today than they were back then. Obviously not all of them. About half of the Mag 7 is up, half of the Mag 7 is down. But as a whole, the market as a whole, we're seeing the NASDAQ, we're seeing the S&P 500 up from where it was in January. So how does that relate to Bitcoin? I'd say there's 2 really important factors. And the first is the success of the retail investor. Bitcoin has been built on the back of retail investors, and retail investors are normal, everyday people. It's not hedge funds, it's not governments, it's not sovereign wealth funds or massive businesses. It's normal people putting money in for their 401k or putting money in because they're trying to fight inflation and buy a house. Retail investors were the biggest winners during the Liberation Day market pull-down fiascos. Most hedge funds and sovereign wealth funds they were pumping the brakes. They were pulling off. They were not putting money into the market. Meanwhile, it was people on Twitter. It was people on Wall Street Bets. It was everyday buyers saying, no, we don't think there's going to be a recession. We don't think these stocks are going down, and we're going to buy it. They're on sale. Let us get in. And retail investors, for one of the first times ever, reached nearly 25 to 33% of the market. That means one in every $3 that's actually invested into the market was coming from everyday retail investors, where the historical average has been closer to 15%. That is huge. That means retail investors saw, if they timed it correctly, nearly 40% gains already on the year. A lot of these retail investors succeeded wildly, and that is important to Bitcoin because it is a grassroots movement that started with the retail investor. Second is you have to look at, if all of these conditions are worse, if we had tariffs, if we had wars, if we had uncertainty that we didn't previously think we would have, but the prices are higher, why is that the case? And the answer is, one of my favorite analogies that I heard is someone said, I could be 7 foot tall if we just shrunk our unit of measurement. And that's exactly what's happening with the dollar. These companies could be worth $2 trillion, $10 trillion, $100 trillion if we just shrink our unit of measurement. And if the unit of measurement is the US dollar and we continue to devalue that dollar, you're going to see the price evaluations of these companies continue to go up. The devaluation of the dollar is very important for Bitcoin. One of the core investing principles of Bitcoin, and one of the main reasons that I'm invested in this asset, is because it is a fixed supply asset. There's exactly 21 million of them, and that will never change. Because of that, it's extremely sensitive to devaluations and fluctuations in what we call liquidity, or the number of dollars that are actually circulating. Because it is a fixed supply asset, if the number of dollars increases, the rate that Bitcoin kind of chases that is faster than any other asset. That's why we've seen Bitcoin perform the best in these really high inflation environments. And so if we look at the stock market and we look at what's happening and we say, over a 6-month time frame, despite nonstop negative news, we're at new all-time highs. In my opinion, there's really one strong reason for that. And there's one principle that you can look at and say that's probably why we're seeing what's happening, and that is we're printing US dollars, and investors are expecting that moving forward over the next year or 2 years, the money printers are going to run wild. We're going to see high inflation. We're going to continue to see the dollar devalue. If that's the case, you can expect Bitcoin more than any other asset to catch up with that inflation, surpass that inflation, and to perform the best over that time frame. So this is a little bit of a different video. Like I said, looking more at the stock market, looking more at something that happened very recently, but I think it points to a global or a broader macro trend that since 2008, we've seen a lot of environments that should have created a recession in the past. But despite that, we continue to see prices go higher and higher and higher and higher. And in my opinion, the best way to explain this is we keep printing more money. We keep running rampant deficits. We keep expanding the United States debt. As long as that happens, whether it's tariffs, whether it's wars, whether it's unemployment or AI taking jobs, we're going to keep reaching new all-time highs. Whether it's better or worse for our economy, that's what's going to happen. As long as that's the environment we're in, I'm going to put my money on the horse that is best suited to run in this liquidity race, and that's Bitcoin. Thank you all for listening. I hope you all have a great time, and like I said, enjoy. I have a new video coming out soon, Who Should Buy Bitcoin, recommended by a friend of mine. Really excited for it, so hopefully that'll be out this weekend. Thank you all for listening. Bye.